Everywhere you look today, news channels, social media, WhatsApp forwards, there is only one word trending, that is budget 2026. But what is exactly the budget 2026? Why is everyone talking about it? And most importantly, how does it affect you and me as a common man? Hello everyone, this is Tarun and welcome to the YouTube channel Tarun Chaikuri's World. In this video, we'll break down Budget 2026 in simple language, no jargon, no confusion, just clear explanation so you understand what has changed, why it matters, and how it impacts your daily life as a common man. Before getting into the key highlights of Budget 2026, first we'll know what is budget and why we should know about it. Budget is the government's yearly plan for income and spending. Then why we should know about it? Because it affects your salary, household expenses and living costs, and it decides the taxes you pay and the benefits you receive. Our first point is about public capital expenditure for financial year 26-27, that is about 12.2 lakh crore, highest ever capital expenditure allocation by Government of India. The total capex equals 4.4% of our total GDP. These are the capex highlights. Let us discuss one by one in detail. 7 high-speed rail corridors. Nirmala Sitharaman ma'am has announced 7 new high-speed rail corridors which aim faster connectivity, reduce logistic cost, industrial growth. So 7 are one from Mumbai to Pune, then Pune to Hyderabad, Hyderabad to Bangalore, Hyderabad to Chennai, Chennai to Bangalore, Delhi to Varanasi, and Varanasi to Siliguri. Then MSME Growth Fund. This year government is going to allocate 10,000 crore to MSMEs. So what is MSME? MSME is micro, small and medium enterprises, which are the small scale industries. So in simple terms, the MSME Growth Fund helps small businesses grow bigger, stronger and globally competitive. Biopharma Shakti initiative. One more 10,000 crore is going to give to biopharma technology. It focuses on strengthening biopharma and biotechnology manufacturing in India. The objective is to strengthen biopharma and biotech manufacturing ecosystem. Next initiative is expenditure on CCUS technology. CCUS is basically carbon capture, utilization and storage technology, which reduces greenhouse gas emissions, aid in cleaner energy transition, boost development of new technology. The next one is Coastal Cargo Promotional Scheme. The government scheme to support and promote movement of cargo by sea along India, which reduces logistic cost, enhances coastal shipping, relieve pressure on road and railway networks, which led to increase in inland waterways and coastal shipping stock prices. India's economic growth rate increases to 8.2%. GDP growth revision from 7.6% estimate to 8.2%. India remains one of the world's fastest growing major economies. Wait. What is GDP and what is this economic growth rate? A GDP is the gross domestic product, means the total value of all goods and services produced in a country in an year. Simple example, if a country produces cars, food, clothes, etc., the total value of all these put together is called GDP. Then what is economic growth rate? Economic growth rate is the percentage increase in GDP compared to the previous year. For example, GDP was 100 last year and it becomes 108 this year. Now the economic growth rate is 8%. New Income Tax Act 2025, which will be effective from April 1st, 2026, with simplified tax rules and redesigned forms, lower TCS rates for remittance and scrap, shares buyback will be taxed as capital gains, easier compliance and filing deadlines. We'll discuss some other points of New Income Tax Act detailedly. First one is about ITR filing due dates. For individuals, that is to file ITR 1 and 2, it is 31st July. For non-audit business cases and trusts, it is 31st August, and to file revised or belated return, it is 31st March with a nominal fee. So we can say more time and less stress for taxpayers. Next point is about automation of lower or nil TDS certificate. Earlier, getting a lower or nil TDS certificate involved heavy paperwork and manual approval. Now it's rule-based Automated approval system, especially beneficial for small taxpayers. Faster approvals, minimal interaction with tax officer, reduced harassment. So compliance becomes quicker and smoother. Next point is about centralized submission of Form 15G and 15H. Now, what is Form 15G and 15H? So, Form 15G is basically a form submitted by individuals below 60 years used to request banks or companies not to deduct TDS on interest income, applicable when total income is below tax limit. So, Form 15H is submitted by senior citizens, that is, whose age is above 60 years or above, also used to avoid TDS on interest income. Even if interest income is high, tax can be avoided if tax liability is nil. Earlier, taxpayers had to submit Form 15G and H separately to every bank or company. Now, depositories can accept one central submission. It applies to taxpayers holding securities in multiple companies and banks. So, one time submission instead of multiple submissions reduces paperwork, confusion, and time saving. It's a big relief for senior citizens and small investors as well. And next point is marked interest fully tax free. Now, this marked interest is the interest received from Motor Accidents Claims Tribunal, which is now fully exempt from income tax and no TDS is applicable. So, accident compensation is meant for relief, not taxation. So, families receive full benefit without any deductions. It's a significant relief for accident victims and families. Next point is about TDS on NRI property transactions. Earlier, buyers had to obtain a TAN to deduct TDS while buying property from NRIs, that is, non resident Indians. Now, TDS can be deducted using buyer's PAN as well. TAN requirement removed, easier compliance for resident buyers, faster property transactions, and a major procedural relief in real estate deals. Next point is about clarification regarding TDS on manpower services. So, manpower services means supplying workers on contract like security, housekeeping, or labor, and not selling any goods. Previously, there were so many disputes running on these TDS rates. Now, government clarified that 1% TDS if contractor is an individual or HUF, and 2% TDS if contractor is others, that is company or firm or LLP. This brings uniformity and reduces disputes. Next point is regarding clarification on TCF relief regarding overseas payments. Earlier, TCS on overseas tour packages was 5% or 20%. Now it is reduced to 2%. And a TCS on education and medical expenses under LRS is also reduced to 2%. TCS usually blocks cash flow even though it's adjustable later. So it's a big relief for middle class families sending money abroad. Next point is regarding foreign asset disclosure. It's a one-time opportunity. A 6-month one-time disclosure window introduced for small taxpayers. It applies below a specific threshold, helps regularize past non-disclosures, encourages voluntary compliance, avoids harsh penalties later. It's a big chance to clean up past mistakes legally. Next point is penalty and prosecution relief. Immunity extended from underreporting to misreporting. Conditions apply. Decriminalization of non-production of books, certain TDS defaults. The focus shifts from punishment to compliance. Reduces fear among honest taxpayers. It's going to get trust-based tax administration. Next one is regarding GST and customs. The government is going to amend the following rules for ease of doing business. So, trade and compliance simplification. First point is regarding post sale discount simplified. So, no need to link discount to specific invoices, commercial flexibility restored. Second point is credit notes explicitly allowed. So, credit notes permitted for post supply discounts. So, GST disputes are likely to reduce. Then, third point is provisional refunds expanded, now extended to inverted duty structure cases. So, working capital blockage reduced. Fourth point is regarding export refund threshold removed. So, minimum refund limit fully removed and small exporters benefit significantly. Fifth point is regarding courier exports, it's a major boost. So, 10 lakh per consignment cap removed, MSMEs and e commerce exporters gain.
Sixth point is regarding intermediary services for place of supply, shifted to recipient's location and reduced ambiguity and litigation. In customs regarding digital and trust based reforms, point number 7 tells single digital window. So, one platform for all cargo approvals, which results in faster clearance. So, eighth point customs integrated systems, that is CIS, unified systems to be rolled out in 2 years, technology driven customs. Ninth point trusted importers, that is AUOs, duty deferral extended from 15 to 30 days, reduced physical checks, lower costs, and fast movement. Next point is regarding sector specific tax incentives. So, tax holiday up to 2047 for foreign companies providing cloud services via India based data centers to promote and encourage global tech companies to set up data centers in India. So, tax free will be provided up to 2047. Then, MAT exception for non residents paying tax on presumptive basis. Then, basic custom duty exemption on aircraft parts and components, lithium ion battery manufacturing capital goods, nuclear power project imports extended till 2035. Then personal imports custom duty reduced from 20% to 10%, which is a significant change. Then personal imports custom duty reduced from 20% to 10%, and 17 cancer medicines plus 7 rare disease drugs fully exempted from BCD. That's it, guys. These are the specific highlights in budget 2026. Now, the question is how it helps a common man. So, firstly, more jobs through infrastructure spending, then better public services in the long run, then support to MSMEs through 10,000 crores fund, then focus on manufacturing and self-reliance, then lower logistics costs and simplified tax system coming soon, which will be effective from April 2026. Along with the pros what we discussed, there are some cons as well. So first one is no immediate cash relief for everyone, that is benefits are more long term not instant. Then inflation risk, higher government spending can increase prices in the short term. Then gold and silver prices volatility, due to the budget changes it can cause uncertainty for household savings. Then benefits unevenly spread, urban and industrial areas may benefit faster than rural regions. Then higher borrowing by government, it can affect interest rates and future taxes indirectly. And that's it, guys. It's all about the gist of budget 2026 in just 12 minutes. If you like the video and if you feel that the content is informative, please do like, share, and subscribe to Tarun Chekuri's World and follow for more informative videos. Thank you.